Hi, I'm going to show you how to build a trading system using the Ichimoku cloud. Very simple, but very effective. Let's roll the intro, I'll tell you all about it. Hi and welcome back. And for those of you who haven't been here before, my name is Langers and I am the Scruffy Trader. And what I'm trying to do is put trading in the real world. Show you a little bit about what I do for a living and hopefully show you a trick or two along the way. If that sounds good, please click the little subscribe button. Genuinely helps to motivate. And let's crack on. Well, I'm asked constantly, how do I trade and what does this indicator do and what's the best pair and one thing and another, and I try to get through them. And this is one of those questions. But firstly, I'd like to give a little thank you to a couple of new members on the Scruffy Squad. And one of them has a fantastic name. We've got Cameron Harvey and Monkey Orchid. Now that is a name. But you're very welcome, and I am genuinely grateful that you've come on board. Thank you. And then there's a one for a long time subscriber, and I still love his name, Odin's Mandate. You watch my videos, you'll know I'm just a giant kid at heart. Who'd have guessed that one? Yes, it's Star Destroyer from Star Wars, favourite film. But I do like the Marvel Universe as well, so Odin will always be welcome. And we were chatting a while back about the Ichimoku cloud, and I said I'd have a little look at it. Because I've visited it before, but just the standard cloud. Now the beauty with trading is, it doesn't always have to be standard. You can adapt it and change it. And those changes can make a huge difference to your trading. And it's quite simple. You see, everybody looks at the standard settings. So you kind of pray to people that know the game better than you do for being stop hunted and one thing and another. But if you adjust your settings, you can take yourself out of the equation slightly and give yourself a little bit of an edge. Now, personally, I prefer to slow indicators down. And it mainly comes because 30 odd years ago, when all these indicators started to come onto the marketplace and be seen in the banks, etc., they're based on bank hours, which is Monday to Friday, 9 to 5. But the markets have evolved over the last 30, 40 years, whatever it is, since the first ones came around, to 24 hours. So they're kind of a little bit outdated. The principle is bang on, but the settings need to be modified. And with the cloud, this thing dates back to the 30s, and it didn't actually hit the marketplaces to, I think it was about the 50s. It took the guy a good 20, 25 years to adapt this, and the Japanese traders all started to take it on board in the 60s. But like I say, you span this forward, you know, from the modern computer age, which started in the late 70s and the early 80s, to now. The settings are a little bit skewed. So what I'm going to do is, I'm going to jump onto the screens and we're going to try and build up a trading system using a cloud, alter the settings slightly, see if we can bring something in that can add a little bit of confluence. Because one thing you can never do with any indicator is trade it on its own. You must have something alongside it, just almost like belt and braces. It's just to add a little bit more weight to your decision, because otherwise you are flipping a coin, okay? And you want the edge on your side, not the market side. So let's go on to the charts and we'll see if we can build something, and hopefully you can add it to your little toolbox. Okay, so come to the charts and we'll just pull one up and see if we can build something. Very simple. Let's have a look. Euro USD, crowd favorite. Everybody likes the Euro USD. Okay, so like I said, the basis of this little system that we're going to build is on the cloud. All right, so if we pop a little cloud on, help if I was on the right setting. There we are. And the first thing you will do when you look at that is go, oh my God, hide my eyes. And I wouldn't blame you, because I look at it and feel exactly the same. It is horrific. But the part we're interested in is this bit, the cloud itself. All right. So what we're going to do is we're going to manipulate the cloud a little bit, just to bring it into line and also make it more visually stimulating. So when you're looking at it, it's nice and clean. So let's get rid of these lines and actually slow the thing down. Okay. And the way to slow it down is just double your settings on this one. Okay. 52 and 104. So that's your settings on it. And what the cloud essentially is doing is it is breaking up the long and the short and giving you a good support and resistance area in the middle. But it also protrudes forward here. And it kind of gives you a rough idea of the general direction. So it's trying to tell you that it is down, short, and sure enough, the market is selling down. So it's not a million miles away. Okay. So what we're going to do is I'm going to take this back to the beginning of this month just to keep this relevant and up to date. So take it back to, yeah. So it's Monday the 3rd was the first trading day of August. So that's kind of here. So that's our starting grid. But just to trade the break of the cloud, you can do it, but it's a bit risky because it is a time cost. All right. So what we're going to do is we're going to try and add a little bit of confluence to the decision to give you that bit more, well, let's just call it confidence of the decision that you're going to make. And confidence is a good thing in the markets. It keeps your mind clear. Because if you're trading from fear, you'll have a tendency to overtrade, or you'll revenge trade, or you'll just jump in where angels will fear to tread. So let's pop something else on to try and help this along. And the next crowd favorite indicator is the MACD. Everybody uses the MACD. So we'll pop a MACD on. Now we're building a picture up. You know, you can clearly see that that's short, but you want this to confirm that. Okay. But everybody looks at this. So we have to manipulate this indicator as well. So what we're going to do is we're actually going to drop the signal line off it altogether. Don't need that. And we're going to change the way that you would trade this. See, because traditionally you would just do it on the cross. Well, we take that away, that cross isn't there anymore. So you have to look at it a different way. We are going to alter these settings by 2.5. So it's 30, 65, and 23. And what we're looking for is the MACD line and the center using the histogram. Now I'll thicken that up and I'll change the color just so you can see it clearly. Okay. So the black line is your MACD, and what you're wanting it to do is cross the center line into a color the same direction of your trade. So in this case, it's crossing the center into red, representing short, or this way, vice versa, into green, representing long. So it's kind of a filter for your trades. Okay. Now, stop loss is the other side of the cloud. And you also want to be looking to be risk-free at around 20 pips. Okay. It's kind of like a double edge, if you like. So your hard stop is literally as it says it is. It is just something to get you out of the market. You know, might hurt you, but it won't kill you. And you're risk-free at 20, which means if it does turn around and come and take you out, the worst it's done is cost you time, not money. And that helps build your confidence. Okay. So let's have a little look and see what we've got to play with. So you're waiting, and just before we go, this works best on hourly and above. All right. If you want to try it on the shorter time frames, by all means try and manipulate it, but it's not something I recommend. These sort of systems work best on hourly and above. Okay. So first entry point is there. Okay. So we'll make that line blue. We'll do blue for entry, and we'll put another one on just so you can see your stop directly above it across on the other side of the cloud, and we'll make that one red. Okay, just so you can easily identify them. There we go. Okay, so breach the cloud here, giving you an entry, and your entry is always the other side of the wick. All right, you don't just click into it and go, right, it's broke, I'm short, I'm off. You want the market to come into you. So have it a pip or so on the other side of the wick. So it has to break into a new direction and carry you forward. So there's your first break. Down, this is red, so it's telling you the direction is correct, and we already know the MACD is in that short position because we've been waiting for this break. However, you did not trigger. But even if you did, you didn't hit your stop and you got bid. All right. But it didn't trigger, went back into the cloud, which if it hasn't triggered and a candle closes in it, you just reset and wait for it to come back out the cloud. So it's gone into the cloud, it's come out, gives you a new entry point, which is there, a new stop loss point, which is up there. And remember, you are risk-free at 20. Straight away, you're going to have people going, risk reward is wrong and all of that. It's not. If you're risk-free at 20 and this is going to 40, you have got a decent reward. All right. This is not your stop, really. It is there just to protect you if you get it wrong. Because I am a good believer that a wide stop loss is safer than a tight one. Tight stop losses are death by 1,000 cuts. And you lose, you lose, you lose. When you win, you'll be lucky if it pays off them losses. All right. Unless it's a fixed stop, and then you may get around it. But the markets ain't fixed. So fixed stops don't work. All right. So there you go. There's your first winner. You're waiting for it to come back in. Gives you another signal here. However, as you heard me say earlier, it must wait for confirmation from the MACD. See, if you didn't have that MACD on, you would go, right, there we are, I'm in like Flynn. Look to enter, and you'll be stopped out, you know, because that one might take you in. You might be lucky and not have been triggered, but if that did trigger you, you were definitely stopped out. However, this filter kept you out of that trade, because there is your close, but this is green, so it's not a valid trade. And then when that moved across into making this, you're now waiting to be on the other side. So it's filtered out a bad trade. Okay, so I'll just move that out of the way. So that has crossed the center, the 0 line, telling you to look for long only. This is green, confirming that. So you're waiting for your first close outside of the band, which is here. Okay, so this is pretty tight. So it is there. Okay, so that's above. Relatively tight stop loss on this one, which is there. That didn't trigger it because that is above, but this little boy here did, giving you an entry. Okay, risk free at 20. That went up to 97. So you'd have gotten a decent return off this. And when you have big moves like this, you want to be managing your trades. You've seen the way I do it if you look at the other videos. I normally break it up into multiple positions. And the reason that I do that, it saves me manually having to carve it off. Just carves off as it goes up. But I would recommend once you hit risk free, take a little bit off the table so you're being paid for your effort, and then see what else happens. Okay. So we move along. And it drops through here. But it doesn't trigger. And I know you'll be saying, hold on, it's red and it's through the cloud. I have to go in. You don't, because again, the MACD line has not breached the 0. So it's filtering you again. All right. The initial burst would have been there. But because you couldn't get in, because this told you you can't, you wait. Crosses, and the cross is on this one. And because you waited, you actually got a better price. So it's worthwhile waiting, and it's a relatively tight stop loss as well. Remember, we are risk free at 20. Tool on. That went down to 31, that one there. So you'd have been break even on this one here. So yeah, it did keep on going. You could have held your nerve, but you take the rough with the smooth. And as long as you're getting paid, don't worry about things that you never had. You know, worry about the profits that you put in the bank. That is it. Now you could say, right, it's touched, I'm going to go in again here. However, the sentiment is changing. It's now green. So it keeps you out of the trade. Right? Personally, I prefer to see a close inside the cloud and then come out rather than a tag. But that's personal preference. But all this is doing all the time is filtering your trades. So you're waiting and waiting and waiting. There we are. It's closed inside here. It's come back out. However, like what I said before, it is green. You do not take the trade because the sentiment is the opposite direction, which is confirmed when this crosses very shortly thereafter. Okay. So the cross is now there, looking for you to go on the other side. And your first close is this little boy here. So we'll move that up just above. Pull the stop loss directly to the other side of the cloud, and we're ready to rock and roll. This one could be a bit naughty because it went up and then came back down, but our stop loss is 20. That's right, we're risk free at 20. 25. So this one probably only ever cost you time. And time is a commodity you're willing to give away because it doesn't empty your bank account. All right? But it does teach you patience and discipline. And then we come down again into the cloud. This is stayed above. You don't take that one because it is red. You wait for the sentiment to change, which is here. So we are now back to being long again. So your entry candle is this one. There. It's going to be a bit of a naughty stop loss because you are on the other side of that. But the move is substantial. So waiting for a clean trade. There you go, 116, it moved up. So if you manage that properly, you'd have had a decent return from it. Okay, and it's all being filtered by this and this. And then we're coming up to sort of the end of the month. So that's run down. It's coming into the cloud. It is now gone red. So we are looking for a short only. And you wait and you wait and you wait. That one there is green, so it's not valid. That one is green, so it is not valid. But that one is red, so your entry point is this candle here, which is the first of the breaks that corresponds with the MACD. Yes, it's a horrible stop loss, this one, and you're thinking, oh my God. But you still got 45 pips out there. And who knows? All right. So there we go. Simple system. It didn't lose once this month just by filtering. And if you were, even if you were just targeting 20 pips on every trade, it paid you on every position that you opened up. Do it on 4 or 5 markets, maybe 4 markets, because you won't be doing this every day, but then at least you'll be opening a trade maybe every day. Just food for thought, guys. So there we go. See if you can pop that in your little trading toolbox and pull it out as and when. Manipulate the settings to suit yourself. I just find these work quite well. I often just double it or times it by 1.5 or 2.5, and then I play with it and I back test it for 3 years to see what will come up. All right, and that's what I suggest you do. Always back test. Go back at least a year and have a good look at it and see if there is a decent sort of win-loss ratio. And if you are winning 60-70% of the time, you can build yourself a good system off that. All right. So I hope that makes sense. If you're stuck, by all means drop a comment below, because I genuinely answer every one of them personally. Or just come along and find me on my blog. It's easy found, scruffytrader.com. All my contact details are there, and I'll happily try and put you in the right direction. Okay. So again, thanks for watching. And remember, guys, do what you love, and money will follow. See you all in the next one.